everyone. I have an all-star panel right now of Larry Lepard, Greg Foss, and James Lavish. And I know the constant Bitcoin Twitter trend right now is the meme macro, macro, macro. It's all macro. And as much as the Bitcoin Twitterverse may be getting tired with it, I think it's becoming very obvious that Bitcoin is maturing. And for better or worse, you should understand some macro if you're holding Bitcoin, whether you want to or not. It is getting embraced by the world. So maybe I want to start with something that I heard Greg say on stage. And again, I learned through Bitcoin lens of the traditional financial world. And you said the first thing you said on the stage was credit rules the world. Could you maybe just break this down TLDR, and then we can get into where we are in the current phrase of the world?
Yeah, sure. I guess I'll just break it down in terms of size of market. Global credit at around $350 trillion is over three times the size of global equities. So something that's three times the size, bigger boy in the room. Maybe you guys can appreciate that. But then more importantly, credit runs the world because it's the first claim. Credit ranks senior in claim to equities. So you need to know what's going on in the credit land if you're an equity holder. So when I say credit rules the world, it's because it's the biggest asset class, and also because it has a prior claim in the event of distress.
And I would add that credit rules the world in our world because the U.S. Treasury is a global reserve asset, and that has pretty much the claim on the world. And so when you're looking at what's going on in the world, why you keep hearing about macro, it's because the treasuries. And what we've been talking about, we just got off stage talking about, is the debt spiral. And that's because there's so much debt in the world, and that is being led by the treasury, that we have no choice but to look at that as far as what indication is what's going on financially in the world and how healthy or unhealthy it is.
What we're seeing is that the treasury assets used to be the risk-free asset in the world. It used to be the asset that everything was priced off of. It was really the cost of money, and it was cost of money as measured in treasuries. And in fact, what is beginning to creep into the market very clearly in all the signs that we see is that treasuries are no longer risk-free, because the market is beginning to perceive that the U.S. government fiscal situation is bad and getting worse quickly.
You say before we got up here is you said it's going to be an interesting year.
Yeah.
I would argue that it's already an interesting year. It became very interesting in the last few weeks.
Well, could you explain to the people what is so interesting that happened in the last few weeks?
Yeah, I'll take that. Go ahead, Greg.
No,
I'll take that. The 10-year. So people should go and get TradingView or any charting service and pull up a chart of the 10-year yield. You know, the 10-year yield as recently as 3 or 4 months ago was in the low fours, right?
The 10-year U.S. Treasury is the benchmark bond of the world. Like, this is the one that everybody looks to kind of set where they are. So,
right. And it's gone from the low fours into the high fours in a very, very brief period of time. I mean, the kind of thing that generally only happens in emerging markets. And so it's an indicator that demand for our bonds is going down, and obviously supply is going up because we continue to run big deficits. And the thing that's important to understand is these deficits are being run in the context of what's theoretically a healthy economy. You know, in the past, as Luke Roman points out, in the past, when you have a recession, when you have a 2008 or a 2001 event, you know, you can count on the deficit going up, 10 to 20% of GDP. Right now, we're already running an 8% deficit, which is the kind of thing we would be running if we'd had a big event already, and we haven't. So it can only get worse.
I know we want to keep this pretty simple. So when Larry says 8% deficit, what that means is 8% of your GDP is in deficit. Now, what's the U.S. GDP, Larry?
25 billion.
25 billion. Let's do some quick math. What's 8% of 25 billion? Oh, 25 trillion. Yeah. Oh, we're at a $2 trillion deficit. When I say we, that's you guys, because I'm Canadian. But we're in bad shape too. Okay, so just understand that this is a global phenomenon. It's we use the U.S. numbers, but it's reflected globally as well.
To James's point on the debt spiral, the reason we're at that $2 trillion and it's only going to get worse is that we have 33 coming up on $34 trillion of debt.
So this is really great.
It's gone from 11 basis points 3 years ago to 525 basis points today. And so, this is why we call it the doom loop or the spiral. More debt means you got to borrow more, means higher interest rates, and it just circles around on itself and keeps getting worse and worse.
So bad that in the last 2 weeks, we've borrowed another $500 billion in the last 2 weeks. So we've gone from 33 trillion to 33.5 trillion in 2 weeks. And we're in what we call the debt spiral, which is exactly what Larry just said, where, you're operating in a perpetual deficit, which means that you have to borrow, which means that you're issuing bonds, which means that your interest expense goes up, which drives down drives up the deficit, makes your deficit larger, which means that you have to borrow more, which drives up the interest expense and eventually drives up the interest rate as people realize, oh my God, there's a tsunami of debt that's coming into the market. And so they're going to demand more for those treasuries, and which is what they're doing. You're watching the market do it right now in real time, which drives up the interest rates, which drives up the interest cost, which drives up the deficit, which drives more borrowing. We're literally experiencing it.
Amazing. Foss, I love memes, and I think it's 11th grade math meme is one of the best ones because you can boil it down to basics. And one question that I wonder, again, I looked through all this through a Bitcoin lens. I learned Bitcoin first before I even understood anything you guys could talk about. And I always think about, like 2008 crisis and how they were able to just like paper over it. Is it a possibility of them being able to kick the can down the road? How much longer can we be in this position? Is this one of those like Wile E. Coyote moments where like you're off the cliff and you just need to look down at your feet and we just haven't looked down at our feet yet? Like where are we right now?
We're going to have a disagreement on this a little bit but let's start by paraphrasing. Nobody knows. Okay. So we're going to have three opinions, likely differing a little bit, and none of us are going to be right. Okay. So let's start with that. I actually believe it will continue, partially because I hope it continues, because I can't fathom what it'll look like if it doesn't continue. Like, it will be very ugly. Can it hit a wall at any moment? Absolutely. You'd never know. So I think my two partners here will disagree in certain aspects of that, but I'll just say nobody can be certain, but you buy your insurance before the event. You don't try and buy your insurance when the event is happening. And I view Bitcoin to an extent as insurance against this event, this outcome.
You're not going to buy flood insurance when the hurricane's already hit, or fire insurance when the wildfires are already raging behind your house. It's just not going to happen. So that's right. I kind of agree that it's going to take a little bit of time. It's not going to be. I don't think it's going to be this cycle. I think that they're going to be able to kick this can down the road. Why? Because the U.S. dollar is still the global reserve currency. The U.S. Treasury is still the global reserve asset. So they're going to kick this can down the road. The entire world is going to facilitate this. The Fed's going to open up swap lines. They're going to dump dollars on sovereigns and foreign banks, and they're going to allow for them to and facilitate for them to keep buying treasuries, which means that they can keep this debt spiral going for a long time. I think it's going to take a minute. So I kind of agree with Greg on this on the timing of it. I don't think it's imminent, but I do believe that it could be. It could happen rapidly, and we've seen it in Weimar. And and Larry's got this point, which is a good point, which is that's why you need your insurance now, because you don't know when.
Yeah, and so we've got to define what the quote unquote it is. I think that if you're talking about complete and total currency failure and Weimar stuff, no, that's not going to happen this time. We've got several more cycles in us until that happens. And my prediction, my outside time frame on that is 2030. It could happen sooner, but I think we've got a few more swings. But I think that the actual pivot event, right now we're steering towards deflation. And if we continue on the path we're on, we're going to have something that looks like the 1930s. The system is going to implode on itself. Banks are going to be going bankrupt. People are going to be losing jobs. Inflation is not going to be the problem. Deflation, serious deflation, is about to be a very serious problem if they don't pivot. So I think the pivot is imminent, because you can already see them starting to send signals out through the press that the pivot's coming. And so when they do pivot, I think it gives the system new life, and we continue growing, and economics are healthier. But also it gives inflation new life, because the pivot will involve printing more money or stopping the tightening of the cycle that they're in right now. And so, and in that case, in my opinion, the two tells will be Bitcoin kind of going through 40,000, which I think it'll do fairly quickly, and gold going through 3,000, which I think it'll do fairly quickly. So I think the pivot is imminent. Is this the last pivot in the last cycle? No, it's going to take more to put the whole system down. But we cannot, in my opinion, we are seeing events occurring right now that cannot continue, not even for a year, or else something really big is going to break. That's my view.
Wow. Well, now I'm starting to realize why most Bitcoiners don't like the macro talk, because it really makes you feel terrified. You're like, holy cow, where are we and how do we fix it? And it really begs the question, is there a fix from within the system, or is Bitcoin literally the only solution to this?
Go ahead.
Well, I think you have to think of it in terms of, like Greg said, I don't want an all-out collapse of the current system. I think that would be chaos. You don't. If you're running a company and you have a settlement system or a back office system, you wouldn't just get a new one set up and then switch over to it and hope that it all works properly. You'd want it up and running. You'd want it to build out properly. You'd want to have all those channels checked. You want to have you'd want to have them operating kind of in parallel tracks for a while, and then kind of switch over to the new one. That's the ultimate outcome, where we have the payment rail set up. We have Lightning that's robust, and it's large enough network to handle all of these transactions. You've got large institutions that own Bitcoin as a store of value and as a separate allocation, like a bond allocation. All of that happening while it's growing. The network is growing. Bitcoin is growing. The adoption is growing. The asset itself has enough money in it that we can switch over to it. That's the ultimate outcome. I do believe that's ultimately what happens, because we are in the position that the United States, it does have that global reserve asset benefit. And I think that it's going to take a very long time to get people off of that, to trust something else, ironically. But I think that is going to give us the time that we need to build out Bitcoin and get all these companies built. And we're all partners in the Bitcoin Opportunity Fund, because we truly believe that there's massive opportunity in this space. And we've met some brilliant people, operators and entrepreneurs who are creating incredible technology around Bitcoin and the Bitcoin layers. And so we believe that is ultimately where we go. And we do believe that we're not going to go into chaos before that we're going to have that chance.
Well, speaking of your fund, I'd like to get maybe some back end insight. What do traditional financial asset managers think of Bitcoin? Is the market mature enough for them? Or are they still looking at us like, oh, it's just some nerd money on the internet? Like, we're seeing grumblings.
You can see what's coming with Fidelity and BlackRock, right? That's a good sign. I think the world is. I think we're in the discovery phase where the world is waking up to this as a great alternative asset. It's a lot better than it was 4 or 5 years ago. They're not fighting us as much. Yeah,
I'll agree. It takes a long time for big money to gain confidence in something. And also, you have to understand, big money can't get involved in a market that's too small. So Bitcoin is also growing into the opportunity to be invested. Let's put it in context so people understand. I mean, Bitcoin at $500 billion is relatively small as an asset. It's smaller than Apple Computer. It's 20 times smaller, plus or minus, than the gold market.
Smaller than the amount of debt that we issued in the last 2 weeks.
But yet 500 billion is still way bigger than Bitcoin was 5 years ago, when it was a $20 billion asset, right? So it would have been nice if big money could have gotten, well, maybe depending on how you believe it, but big money could not have gotten involved in Bitcoin when it was a $20 billion asset. It just, it's like trying to squeeze too many things through a keyhole. But at 500 billion, it's growing into its presence. And then when they do their homework to understand what a beautiful store of value it is and a technology, okay, that's the key. The adoption will increase.
Love it. Okay, last question. Again, it's going to be a little speculation, but with so much capital flowing, or at least interest in Bitcoin starting to garner attention, do you see a then they fight you stage on the horizon, or is it more of an incentive that they can probably profit off of Bitcoin versus fighting it?
Go ahead.
I think they're already fighting it. You hear the comments out of Warren Buffett and Jamie Dimon. Gensler not approving the Bitcoin ETF yet, the spot ETF yet. I think that's just an indication of the tremendous pressure he's getting from traditional finance and the large banks and the large asset managers. But at the same time, there's a faction growing there, and you've got Fidelity and BlackRock that they're teeing it up to take a large market share of that activity as it comes on. So of course they're fighting us, and they will continue until they just don't have they don't have the ability to fight it anymore. But Bitcoin is tremendously disruptive to their business and their business model. So of course they're going to fight it, but they're going to lose.
Yes. Okay. Last thing, and it's more of a comment. Larry, I think you've been a hard money advocate longer than I've been alive, which is one of these things that is, I'm not trying to age. I don't mean to do that. It's more of like, you've been in this game for so long, and I really just want to maybe get some wisdom from your view on, do you think people will wake up to hard money? Do you think people even care about it? Like, that's what I'd like to ask.
Yeah. I mean, it's been a long fight, and they cared about it in the 70s, and then they Volcker put it back in the bottle, and they didn't care about it for 20 years as we had all this credit growth. But we're back at that stage now where the math has made it something that people are going to care about. And I don't have any doubt in my mind that in the next 10 years, it's going to be the issue that's going to get resolved in this fourth turning. And so, I've been waiting a long time for this event, but, as Greg says, it's just math. You compound the shit, and eventually somebody's got to pay. And I mean, the late economist Herbert Stein, who was a Nixon era economist, said, if something cannot go on forever, it will end. It was Stein's law. And you look at the math, it can't go on forever. It's going to end. Now, could it be tomorrow? Probably not. A few years, maybe. I think within, the end of the decade for sure. But it could be longer than that, I suppose.
But they will print a ton of money between now and then.
Right. There's no doubt there'll be a lot of debasement. Do they keep the system together? Maybe they do.
Band-Aids, BTFPs,
I'm rooting for them not to, obviously.
Quiet QE, stealth QE. They're just going to keep doing it.
They got a lot of tools, and they're pretty good at bullshitting.
Yeah, great at bullshitting.
Yeah.
Wow. Gentlemen, it's an honor to be in the trenches with you guys and just continue to do what you guys do. I think you guys are able to explain all the jargon of Keynesian economics in the traditional financial world. So someone as left side of the bell curve like myself can understand what's going on in the world. And so I appreciate your guys' works. Thanks for sitting down with me.